wanted to start with M&A market and how you see the Trump administration changing things, particularly in the antitrust.
I think the general euphoria around M&A, at least as a relative position, is well-founded. Deals will move faster. More different types of deals will get approved. But you do have a different trade agenda. You could see that's an area where M&A, may be more constrained than people think. Another area where it may be more constrained than people think is the consumer. If you want your M&A deal to go through and you want the government to feel good about it, make sure you have the consumer on your side. 50% of the revenues in the S&P 500 come from outside the United States. Japan is in a similar spot. I think we should both recognize that one of our greatest assets that each of us has is that giant pool of capital that brings returns back. The SEC has been a focal point for looking at the regulation of crypto because one of the core components of the SEC's job is to ensure that capital raising is done in a rigorous way. So I think it's here to stay. I think it's so here to stay that it's going to become integrated into the traditional financial system. If the conventional wisdom of the day is correct, that technology is going to drive growth going forward. So one of the biggest management tasks that the next administration is going to have is managing the energy supply in a way that facilitates that growth.
Prior to the election, I'd say the U.S. economy truly was an outlier in its resilience. The constant harbinger look for recession, I think, has faded a bit. Underneath that growth engine is both resilience, but also residual from fiscal and monetary policies, and importantly, payoffs that we're starting to see in technology.
About inflation, there was a division between macroeconomists, whether this is temporary or persistent. Remarkable thing is that inflation expectation was well anchored. And so people were thinking it is temporary. And it proved, to some extent, it proven right. So it gradually went up to 1.5. Inflation rate from 4% came down to 2.5. But the BOJ is trying to get the inflation rate and the inflation expectation both at 2% and stick to it. Now, that's the kind of art of monetary policy, to manage not only inflation rate, but also inflation expectation.
I would just add a couple of things about partnership with the United States. Both Japan and the United States need more rapid productivity growth. The other is that Japan and the United States can lead partnerships in trade and in commerce. And I think Japan is the natural partner for the United States, particularly in Asia, but also globally in that game. In fact, I think many people are surprised how important trade and globalization remains. That said, I think there will be a lot of emphasis more on friendshoring, on regional approaches to trade.
I think the globalization, as we teach and we understand, will recede in goods, but not in services. The new trend of the fragmentation and U.S. G7, the West versus the Russia, China. There is a third group called the Global South. And Global South is the beneficiary of this U.S.-China competition or conflict.
We have a large direct lending business that does non-investment grade lending, which again is the historical definition. But we've really become a service provider that does some things like a bank, some things like an advisor, something like a retirement service business, and some things like an asset manager. I think it is the future of how people and firms will finance themselves. And in Japan specifically, there is extreme need for two things. One is higher safe yield. You need to originate assets, so mortgages, commercial real estate, all types of lending. But you need to have the relationship on the client side, and we've built that with over 4,000 originators today from close to zero 15 years ago. The second thing that people talk about a lot, obviously, is the last several years, event-driven investing and private equity entering the Japan ecosystem. I think private credit is exactly what the market needs right now. Everything that's growing the economy today, net CapEx dollars that are growing at a faster pace than GDP, energy transition, chip manufacturing around AI, both of those things require super long duration capital. I think how banks and asset managers can coexist in a way that both sides are optimizing for their capital.
Well, the world economy in general has been very, very good, very resilient, despite all the supply chain disruptions and climate change and strange weather events. There's a lot of investor opportunity, as it has been discussed today in the U.S. and in Japan. Well, we are an official financial agency, 100% owned by the Ministry of Finance. And we support Japanese business through our long-term loans. Well, we have surveyed Japanese companies over 30 years where do they want to invest. And India has always been the most popular one. In the long run, say 10 years, while China has always been popular in the shorter term. So we align our activities with the priorities of Japanese government. But as we do accomplish actual project, we make the government policy substantial. Maybe two issues: energy security for Japan and supporting energy transition in Asia. Invest in new things like hydrogen and ammonia. We invested in the world's largest hydrogen fund, H2 Infra Fund. Now I feel much more confident about the way the Japan-U.S. relationship is going economically and politically.
But I think in U.S.-Japan relations, it's easy to get caught up in the short-term news cycle. But at the same time, the U.S.-Japan relationship, as I heard throughout everybody today, is an optimistic point. Thank you all for being here. Thank you for joining us today.